All right, I think we are now live. For everyone that is tuning in today, looks like we've got a good crowd out there. Welcome to what is the very first Resource Insider webinar. It is a long time coming, and there's a lot of people that are going to be talking today. There's a lot of good information to depart, so I'm excited to bring it to you all, and thank you very much for taking the time out of what I know are very busy days to sit with us and learn about some very exciting gold companies. Now, I want to start by telling people new to this a little bit about what Resource Insider is, who I am, and why we're bringing this to you today. So Resource Insider is an investment newsletter that was really started with the sole purpose of bringing the kind of opportunities that are typically only available to professional investors or industry insiders to accredited retail investors to get you guys access to the deals that I would invest in, or a lot of the people who are on this call today have been investing in throughout their career and frankly making a lot of money. And today we're bringing you three companies, all of which I put my own money in, all of which many of my subscribers, I should say, invested in. And to this date, I own stock in all of them. I've never sold a single share in any of these companies. So I'm excited to bring it to a new audience and give them the opportunity to tell their story to sophisticated retail investors that are looking to get exposure to the gold space in the most effective way possible. I think one of the places we should start is addressing what is obviously the elephant in the room here. There's going to be a lot of people sitting on this call today who are thinking to themselves, have I missed the gold bull run? Is it too late? We saw gold run up north of $2,000 earlier this year. Over the last week, it sunk down into 1700, 1770. Is it too late? Are the best days behind us? And as many of you know, a financial hurricane hit the market in March, and this was really catalyzed by the coronavirus. And we saw, as a result of that, a flood of capital flow into the mining space, particularly flow into precious metals. And over the coming months, with a vaccine to the coronavirus on the horizon, a lot of that appears to have settled down, and we've lost about 18% on gold from its high. And so the question a lot of people have now, and rightfully so, is it over? Does it go back to normal? But I think that's the wrong way of looking at it, because I don't think it started and it's over. I think the position we find ourselves in today is we are really in the eye of a storm here. We're in this lull period where investors have what I would consider a generational opportunity to position themselves in a sector that is going to see a tsunami of capital flood into it over the coming months. Because all of the issues that were catalyzed by the coronavirus still exist. These big macroeconomic underlying issues, things like extremely low interest rates, things like egregious money printing by governments, debts being racked up. All of these things exist more so today than they ever have before. And this is all very bullish on gold. And I think right now is really kind of the time where you have this rare opportunity to buy your little piece of Gold Island, to get your safe harbor, to put yourself in a position to protect your assets and grow them in the right market. And when this capital tidal wave hits, everybody in the gold space is going to be well positioned to make money. However, some people are going to make a lot more money than others. And what we do at Resource Insider is try to find the companies and invest in the deals that have the most leverage, that give investors the biggest bang for their buck. And today, those are three companies that I think meet that criteria. We're going to be talking to the CEOs and the senior management of three companies: Pucara Gold, Montage Resources, and Omai Gold Mines. And they're all gold focused, but they exist at different stages in the exploration process. So we'll start with Pucara. Pukara is an extremely high potential exploration drill play. It is still considered grassroots exploration, but this team has been putting these assets together and building this company quietly behind the scenes for the last 7 years. And today, the VP Exploration, Ken Bauweg, and the CEO, Steve Zuker, are going to walk you through it. And I invested alongside many Resource Insider members in Pukara earlier this year. We still own all their stock. They came out of the gate at $1 or so on the TSXV, and today they're trading in the 77 cents range. And so there's an opportunity for investors to get into this deal and all the other ones at a significant discount to the price that many experienced and wealthy investors were able to come in at. And we're going to get into that in a second, but something you're going to find here on all the companies that we're bringing you today is they had the incredible misfortune of coming public into a softening market, what I believe is a temporarily softening market. And that misfortune is actually a really, really good opportunity for investors to come into these stories at what I would consider very, very discounted prices and invest on the same terms or better than a lot of professional investors, multi-billionaires, and hedge funds and institutions. So we're going to go through this one by one, starting with Pukara, then we're going to talk to Montage, and then we're going to talk to Omai. I'll explain why I invested in each of those, and then the management teams will be able to give you an overview of what you can expect out of them over the coming months and what the value proposition is for those companies. After we've gone through these 3 presentations, you're going to have a chance to submit questions, which you can do in your panel on the side, and we'll go through them with the various CEOs and do our best to address as many as we can. So thank you guys very much for tuning in today, and without further ado, let's please start with Pukara Gold with Steve and Ken.
Thank you very much, Jamie, for that introduction, and good morning and good afternoon to all of you who have tuned in on this December 1st. Ken and I are here speaking from Peru, and I want to just make sure that everyone knows we've had some internet connection, so in case you hear some weird noises that may come into play. We are a public company that just listed on the Toronto Stock Exchange starting in October. I want to just say something about forward-looking statements. We'll be talking about the potential of some of our properties, and we're pretty excited about them. I encourage all of you to perform your own due diligence. Next. So at Pukara, where did we come from? Well, back about 10 years ago, I was with a group called Esperanza Resources. We had made 2 discoveries and cashed up Esperanza pretty well, and sold off one of our assets in Peru, a discovery, for essentially $30 million cash and equity. Management then decided in 2012 that they wanted to advance the Mexican discovery called Cerro Humil and shut down the Peru operations. I had been working with the team in Peru for about 7 years, and we had a discovery. So as juniors do, focus on something else and jettison those assets. I was there and had the opportunity to make an offer because I believed in it, and the intellectual capital that was around the company to continue and explore in Peru. We made an offer for the assets, all the assets in Peru and the company, and we reached a fair deal. These are grassroots plays, had very little work, no drill holes, no resources. And at that time, things were pretty tough for us to raise funds. Esperanza eventually got 10% of the issued shares on that first raise of a little over $1 million, and a 1% royalty on the existing 8 properties. Hence, we've continued exploration on those properties. We focused on high sulfidation gold deposits, which in Peru, they're prolific, and companies are interested in picking up those kinds of assets. So we were able to focus on this south central part of Peru, where we thought there was a multi-million ounce potential of discovery. Peru is our focus, that's why. What we're doing right now is we are drilling on the Lourdes project. And, you know, why should you guys be interested? Well, this is where a discovery happens. You go from a grassroots play, surface sampling, and you put all the work into it after several years, and we drill test the concepts. Next. Myself, Steve Zuker, I'm a geologist and founder of Pukara. I've been working in Peru for almost 25 years, in and out. There's some other names that you'll recognize. Ken Belloweg is joining us. Ken is an expert in high sulfidation systems. He comes out of Alamos Gold, where he was essentially the founder of the Mulatos Gold deposit, which helped build Alamos Gold to where it is today. He joined us about 4 years ago while we were exploring for these same types of deposits that exist in Mexico, high sulfidation epithermal gold deposits, and we're very fortunate to have him along today. He's going to talk about some of the technical aspects a little later in the talk. Dave Oram, co-founder of Sandstorm Gold and big supporter of what we're doing and understands these types of systems in foreign jurisdictions. Andy Swarthout's another name you may recognize. He's also been in Peru for about 30 years and the founder of Bear Creek, and they're now building the mine Karani. Next. This just gives you a little picture of the 9 projects we have in Peru. We're going to talk about Lourdes and Pukara. These are our 2 most advanced properties, fairly big in size and of interest to big companies, and we have a big footprint there that we'll explain later, the size of these things. And then also we've got other projects that are in the works. Some of them we ventured because they weren't in our wheelhouse of expertise, but we've through our exploration activities picked them up and thought they would be very good. Ayacucho is where Pukara and Lourdes is. Ayacucho is basically a province or a state inside Peru where there's been recent activity, exploration activity, but during the 90s and early 2000s, there was very little activity there because of the discoveries in northern Peru and southern Peru and where everybody ran to. But basically, we're in the same belt of rocks that host gold deposits from Chile into Peru, into Ecuador and Colombia. Next. A little bit about our capital structure. There are 62.5 million shares issued and outstanding, fully diluted. We're about 73 million shares. We're fully funded to drill on Lourdes now with about $7 million in the bank. We're pretty tightly held with insiders and associates that have come in, and institutional and corporates are like Resource Capital Funds, private equity group out of Denver, Colorado. Corporates are Sandstorm Gold and Alamos Gold. Next. This is a picture of some of the property holdings in this southern part of Peru and Ayacucho. Between the 2 blue lines are this Miocene age volcanic rocks, which host gold deposits throughout South America. And this is an area that we focused on for various reasons. Back in about 2009 at Esperanza, we recognized this as an area of geologic high potential, but hadn't been explored due to various reasons. One of the reasons was the Shining Path was still here in the 90s, and it was still pretty dangerous. And that's just one of the reasons. And, you know, access is pretty tough. But this slide shows that some of the big boys are here. When I say the big boys, I mean Rio Tinto, BHP, Newmont, Barrick, even the Peruvian companies we'll talk about, from Minsur to Nexa to Buenaventura. The reds are what's showing our properties. You can see them: Pacashka, Los Tambos, Lourdes, and Kayla. This belt of rocks, we've been in here for 10 years, and I think we know them better than most. We've been walking the ground. And this is where I'm going to pass it off to Ken Bellowegg, our Vice President of Exploration, to talk about Lourdes and where it sits in this belt and our exploration activities.
Okay, thank you,
Ken?
Steve. Thanks, Steve. As Steve mentioned, Pukara controls about 42,000 hectares in the southern portion of the Andean trend, which is a northwest, southeast trending belt of high sulfidation, low sulfidation, gold, silver, precious metal deposits. Our most advanced project is Lourdes. It's had the most work done on it. Next slide, please. And it is hosted within the Andean trend, but significantly it is at the intersection of a subsidiary north-south trend called the Pucara trend. This is a north-south trending belt of gold-bearing silicic alteration that includes 3 deposits at the Pucara mine and a new resource area to the south that is being brought into production. It's a developing 1 million ounce trend that really hasn't received much recognition. Next slide, please. The Pucara mine is a significant operating mine. It is a classic high sulfidation deposit, but it also has some significant differences that are relevant to the Lourdes project. It has alteration and rock types that are very similar to almost identical to what we have at the Lourdes project. It has produced 300,000 ounces of gold after initially starting on a 50,000 ounce resource. And there's another resource area of 600,000 ounces reported directly to the south that is being brought into production. So again, it's getting close to the 1 million ounce mark, and it really has not been explored very well. Now, the unique thing about Pucara is that they're mining granular silica. This is an upper level alteration product consisting of very friable, almost disaggregated silica sand, essentially. You can crush it with your hand. There's also silicified breccias that they're mining, but the unique thing about the granular silica is that it is really well suited for run-of-mine production. It doesn't need to be blasted. It doesn't have to be crushed. The gold comes out really quickly, and which allows for a low cutoff grade, and the deposits are extremely oxidized. We've got the identical alteration type hosting this mineralization at Lourdes, and our highest rock chip sampling to date is in this type of material. Next slide, please. So the Lourdes project is located in the northern part of that Pucara trend, 14 kilometers again to the north of the mine. It is about a 4 kilometer by 5 kilometer area of classic high sulfidation alteration consisting of argillic, advanced argillic, and silicic alteration. The key point of this diagram are the areas that are magenta with the breccia pattern. These are areas of intense granular silica alteration, identical or very similar to what is exposed at the Pucara mine. The red areas are massive Devuggy silica, which we've noted occur in the lower portions of the system, and we can actually see the gradation from granular to massive Devuggy with depth. All of these areas of granular silica are breccias, and they're hosted within large explosive diatreme complexes. We've identified 6 different large diatremes with probably over a half a dozen subsidiary vents around the margins. And these are our primary drill targets. The majority of these are multi-stage. The intensely altered diatreme breccias are cross-cut by silicified hydrothermal breccias of varying cross-cutting relationships. So they're dynamic multi-stage systems. Now, 4 of these diatremes are our primary drill targets, and 2 other targets are the associated structural zones, pretty much at their margins. Next slide, please. Oh, before I move on, one other comment. We're drilling 4 of these targets currently. We've completed 17 drill holes to date. Next image, please. This is an image of the 3D image of the Lourdes rock chip sampling results from over 2,000 surface rock chip sampling. What it shows is strongly anomalous gold in the topographically lower areas of the property. High sulfidation deposits show strong vertical zonation. They're usually barren in the upper regions. There's a distinct gold zone, and the gold gradually decreases with copper increasing at depth. So the rock chip geochem is pretty much reflecting the gold down below barren or weakly anomalous surface alteration. Next image, please. Okay, this diagram is of the Lourdes geophysical response and is key to understanding the subsurface potential of the Lourdes property. The upper section is probably the most important. It's showing resistivity, IP resistivity. Now, the reason that this is important is silica alteration, which hosts the vast majority of gold in high sulfidation deposits, is highly resistant to the flow of electricity. So it's ideal for identifying the alteration most likely associated with gold mineralization and directly leads to targeting. So you can see in this top section, the blue areas are highly resistive, and we've got 2 distinct resistivity anomalies that correspond with our 2 largest diatremes. Just for scale, that grid is 100 meters. So the Heopata diatreme, which is one of our primary drill targets, is over 300 meters wide, extends beyond the 300-meter depth of the geophysical survey, and has 1.2 kilometers of strike length. The Pachahueco diatreme, which is over on the right-hand side, is actually a bit off the section of this, so we're just seeing a portion of the diatreme. If we go a little bit to the south, you'll see just a classic funnel-shaped diatreme resistivity anomaly. It's approximately 800 meters. Can you hear me?
Ken?
Yeah.
Yes. So sorry to be rude, but we do have to have a time frame and to make sure everybody can fit in. But I do think it's worth touching on to everyone is sort of what are some of the key takeaways we should be taking from Pukara here? Because when I look at what you guys are doing, the main things are that a high sulfidization epithermal gold deposit or potential deposit such as this has the potential to be really, really big, right? What kind of sizes are we looking at here?
We're definitely looking at plus 1 million ounce potential. I think the size of the alteration is permissible for a 3 to 5 million ounce deposit. These are really large ultra diatremes.
And what else is special about this from conversations we've had is that they can be incredibly cheap to mine. Am I right in saying that these can be very inexpensive deposits to actually mine out?
They tend to occur close to the surface and be strongly oxidized, so have good metallurgy and really amenable to bulk mining, open pit mining.
And we have ore grade there at the surface, just like to the south where mines are producing silica, granular silica that runs over a gram. So yeah, very permissible.
Great. So guys, to paint a picture for people who are listening at home now, right now you guys have a market cap of something like $43 million. These sort of deposits, if you guys find what it is you're looking for, what is the potential for the value of these things, Steve and Ken? Are they $10 million deposits, $100 million deposits? What's the scale of the value of these things you've seen them purchase for in past transactions?
One example would be Arequipa Resources, where Pierina was the discovery that they got bought out by Barrick, and that turned out to be about $1 billion in 1996 for about 5 million ounces of gold at that point in time.
Okay, so that was 24 years ago, $1 billion. It's 20 times the value of where you guys are sitting right now. That's the goal of Pukara right now, right? To find these style of assets, to create that sort of transformative value and takeover for shareholders.
That's absolutely correct. And there's the leverage we have right now at the end of this drill rig. Yep.
Right.
Which
And that's the most important part is you guys are actively drilling right now, despite coronavirus in Peru. You're there and you're getting stuff done. Am I right in saying that?
absolutely. And we're one of the few juniors that are actually doing this right now in Peru, around the world, I'm sure. We've invested a lot in this. There's a lot of people that are excited about it, and we want to make sure things are going the way they should be. That's why we're here.
All right. Thanks a lot, guys. I'm sorry to push you. The meeting organizers are sending me harassing text messages right now, so blame it on them. We're going to get more into it in the Q&A. But next, we're going to talk to Hugh Stuart from Montage Gold. Montage is another deal that we invested in at Resource Insider. Similarly, gold exploration, but at a very different stage. Montage has an existing resource. They're working to expand and grow that into a really, really sizable project in West Africa. You know, this company has been supported by some of the biggest names in the mining industry: Lucas Lundin, Ross Beatty, Sandstorm Gold, Resolute Mining, et cetera, et cetera, et cetera. And Hugh is one of the discoverers and leaders at Redback Mining, which of course was taken out for $7 billion. You know, this team is back in West Africa for the first time. Really exciting story. Enough of me talking. Hugh, tell us all about Montage, please.
Thanks, Jamie. I don't actually need to do the introduction now, do I? Can we have the next slide, please? Just the normal cautionary statements that I don't really have time to read. Next one, please. So as Jamie said, this story really goes back to the Redback time in more ways than one. Obviously, myself, I ran exploration for Redback from about 2003 to 2010 until the takeout. Our chairman, who was the CEO of Redback, and we have the chief operating officer sitting on our board as well. But also the projects themselves go back to that time. So a lot of the portfolio that we're working on currently in Côte d'Ivoire was actually pegged by me probably 10 or 12 years ago. Whilst obviously we put it across to Kinross in 2010, we eventually managed to bring it back into another company, Orca Gold, that we've been working on, which is mainly working in Sudan, in 2017. It wasn't getting value in Orca, so we spun it out about a year ago, created Montage as a private company, and obviously we've just gone public in October as well through a very successful IPO. So in the background over the intervening period, I've pretty much been there making sure that these projects, the discovery holes on this were actually drilled in 2010, just around the time of the takeover. But Kinross really never did anything about it. So we've been really in the background, and finally we've got this package of ground in what I consider to be one of the most prospective countries in Africa into a vehicle. We're well funded, and we can actually start to seriously take the project forward. We IPO'd in October, as you can see. We have Lucas in there, we have Ross. And as Jamie said, we're currently traded about a 20% premium, or 20% discount, sorry, to the IPO price that Lucas and Ross paid. The IPO was very successful. We were after 25 million. I think we had orders for in excess of 60 million. We ended up taking 30 with the over-allotment option, sort of bumping it a little bit higher than that. So we currently have a market cap of around 90 million, shares trading at about 90 cents, as I said, from a $1.10 IPO. And with about $32 million in the bank currently. As I said, completely focused in Côte d'Ivoire. It's a country I like a lot. I'm actually in Abidjan at the moment. I've just driven down from the project site today. And we're really focused on the Morondo Gold Project. Orca defined a resource there in 2018, just over 1.5 million ounces at a grade of 0.9. Montage over the last year since its formation has really been drilling to demonstrate that that resource extends to depth and has the potential to double. And really that's what we're after at the moment. That's what we're working on at the moment. At the same time, a lot of work has been going on in the background to really, a lot of what we do now, what we did with Redback, is to understand what it takes to turn a discovery into an operating mine. And that's very much our focus. We have a very slightly cheesy strapline on the presentation called Discover to Build. But really that summarizes what we're about. We're not simply here to discover resources that are just going to sit there. We really want to discover something that's going to turn into an operating gold mine, because that's the way Redback developed value and was so successful. And we believe that that's why we can develop sort of more value for our shareholders. As I said, we're fully funded for the development or the programs we've got. And if we go to the next slide, please. And we're just started, well, we're probably about a third of the way through a 50,000 meter drill program that started towards the end of September. Small management team, Adam's on the call as well. Obviously myself ran exploration for Redback, Rick was CEO, Kevin Ross, but also some solid independents with Dave DeWitt, who was a founder member of Sandstorm. Peter Mitchell came from Corp Mines, and David Field. And a key guy there is Kevin. Obviously, he's sitting on our board, but he's pretty much acting as a de facto COO at the moment and helping me run a lot of the studies that are going on in the background. Next slide, please. Côte d'Ivoire, in my view, I mean, I thought so 12 years ago, it is the most prospective country in West Africa. It is politically stable. We see none of the Islamic terrorism that we've seen that's blighted exploration up in Burkina Faso and Mali. It's an easy place to work. There are mines being built. Yaouré is a mine in construction at the moment. Ity has just been expanded by Endeavour. So it's a place you can work. And the reason why it's most prospective really dates back to the 90s and the early 2000s, when the country was affected by a lot of political problems, which effectively stopped modern exploration from occurring. So this is one of the few places in West Africa where you can acquire a permit, and you can see our portfolio there, which hasn't really been touched by previous exploration. And obviously, if you can find a permit like that, it's obviously a lot easier to find a gold deposit, and a significant gold deposit at that. So a good place to work. We can get drill rigs. We have 6 rigs on site at the moment. There's a laboratory here in Abidjan. It's got a good mining code that was put in place in conjunction with industry in 2014. So a nice place to work, and an easy place to work, more importantly. Next slide, please. So the deposit itself, you can see the resource table up there. And we are looking at a relatively low-grade deposit here. And for some people, that's, they see a grade sub 1 gram, and they start to get a little bit worried. But one of the key things with this is a lot of the work we've done in the background over the last couple of years has meant that we believe that this can turn into a solid development project. We wouldn't have done the drilling. We wouldn't have taken this public if we didn't believe that to be the case. That resource, as you can see, is sort of centered in that rectangle in the middle of the picture. Most of the work we've been doing over the last year is within that resource rectangle, looking to extend the ore body to depth. We are now drilling up in the northern part of the deposit, extending or infilling on that. And I'm going to say this probably too many times, but one of the key things here is the simplicity of the geology, the simplicity of this story, and really the simplicity of the whole plan that we have going forward. As you can see there was only 18,000 meters of drilling that went in to comprise that resource, which is probably one of the lowest cost discoveries that you probably find. We're probably working on about less than $5 Canadian. So very good value, and that is really due to the simplicity, the scale, the geometry of the resource. So if we go into section on the next slide, please, you can see that the key thing on this deposit is the width of it. We are seeing true widths of up to 250 meters, probably normally around 200 meters. So in many ways, the actual shape and size of this is probably more akin to a porphyry gold deposit. It isn't. It's a classic sort of Bohemian shear zone hosted gold deposit. But it's that width and the size and the scale of it which means that it becomes a solid development project. You can see the original drilling from that went into the resource with the thin black lines. You can see the thicker drilling with the core lances, the drilling we've done over the last year. And again, it's important to understand that a lot of work in the background has been to understand how far and what type of mine we're looking at here. So when we drill a hole like DD5 on the left there, we're drilling that hole because we believe that the mineralized, obviously the mineralization will extend, but also that we can mine down to those depths with an open pit. This project has a whole series of things going for it, which I'll explain on the next slide, if you would be so kind. So again, simplicity is the key. You can see in the map on the top right there, we're sitting on an asphalt road. It runs right next to the project, which means we've drilled through the last rainy season, which is just coming to an end now. Critically, we have a power line. The national grid sits about 20 kilometers to the northwest, so we can access low-cost power. And when you put that into a scenario, into a development scenario, low-cost power means a low process cost. We're looking, because of the grade, we're looking at a large-scale process plant, which is going to probably produce in excess of 200,000 ounces of gold per annum. But that low process cost means that your cutoff grade for mining goes down, which means your strip ratio goes down, which again makes it cheaper to run. You can use large machinery, and really that is, we're seeing on this project a strip ratio probably in the region of 1.5 to 1.6 to 1, potentially lower than that, depending on how the study's going at the moment. So a good location, good access to that infrastructure. Low strip ratio, a very simple ore body. As I said, you can mine this with very large equipment. You can use, which obviously gives you a low unit cost for mining. But the key thing here is the metallurgy. We've just delivered about 2 tons of material to Lakefield in Canada to follow up on some of the early work. Most of this met work that you can see there was done in 2018. Now, speaking to the point I made earlier, we actually checked the metallurgy on this deposit before we drilled the resource, because at those grades, there was no point in drilling the resource unless it was clean metallurgically. And again, you can see on the bottom table, one of the positives for this deposit is that it's relatively soft. So the gold mineralization is not associated with silica, as in many gold deposits. It's associated with biotite, which means we have a low bond index, which is really a function of the amount of cost it takes to grind a rock to the size required to take the gold out. And that obviously means a low cost. It feeds back into that low process cost. It feeds back into the size of the plant, coupled with the low cost power, to make this a solid development project. So it's a very simple flow sheet. It will be a single stage crusher, a standard CIL plant, probably in the range of about 8 to 10 million tons per annum. And as I said, producing in excess of 200,000 ounces a year. We're in the process, sorry, next slide, please. We're in the process of drilling the first of a series of drill phases, which is designed to take the current resource with the aim is to double that resource to in the region of 3 million ounces. We're pretty much done with that. We've probably completed another 18,000 meters of drilling since the previous resource, and that is on schedule. And at the same time, we're running the studies, metallurgy, environmental, geotech, which will lead into a PEA, which will be delivered by the end of March next year. So a lot of catalysts along the way. The budget for this whole program, to take it all the way to a feasibility study on a 3 million ounce, a target 3 million ounce reserve on a large scale gold mine. We're fully funded, but the total cost of that since the beginning of this project will probably be in the range of about $30 million. So again, incredibly good value for money in terms of taking a project to that level of detail in such a short period of time. It's a relatively aggressive program, but again, something we feel is achievable. And obviously the drilling will continue to spew out drill results as we go through this. And with that extra little bit of cash you can see there, we'll be able to focus on some other exploration assets that we've got on in the area. Next slide, please. The second part of the business plan is really looks at the district scale. Once you have a significant operating asset in a place like Morondo at the Côte deposit, it really opens up the district, and that becomes really a center of gravity for the district scale. And once you have that, you no longer need to find standalone deposits. You can find smaller deposits, and even a 200,000 or 300,000 ounce deposit, say 30 kilometers away from a large scale operation like that, has a significantly disproportionate value in terms of NPV and IRR. So the second part of our business plan, obviously we have a couple of applications, permits in orange there to the north, is to effect a bit of consolidation in that district and open ourselves up to a far larger exploration portfolio with which to try and define those smaller satellite deposits which can have that impact on the NPV once a solid development project is established at Côte. So a lot to do. I think that consolidation is obviously easier said than done, but the ground in the middle there is held by Barrick and Endeavour, and obviously they're looking at the moment, following the takeover of Randgold, to rationalise some of their holding. Next slide, please. So in summary, a lot's going on. As I said, we have 5 rigs on site at the 6 rigs on site at the moment. Resource for January, PEA for the end of March, a lot of drill results coming in, hopefully a bit of that consolidation, and really pushing towards that delivery of a feasibility study on a large-scale gold deposit, 200,000 ounces a year, with a 10 or 15 year mine life by the end of 2021. Thanks very much.
So Hugh, you guys are drilling about 50,000 ounces this year, or 50,000, that'd be nice,
I hope it's
50,000 meters this year, is that right?
Yeah, we'll probably drill, we'll get to that 20,000 meter mark by the end of this year, and then we'll just continue the drilling in the new year, which will really be infill drilling aimed at taking the project to the next stage in the sort of second half of next year, feasibility study to develop, to define a reserve.
So in moving that resource to a plus 3 million ounce resource, but I want to put you on the spot for a second. And just a back of the envelope calculation, how many ounces of gold would you estimate you've found in Africa to date?
Oh, that's not fair.
Ballpark.
Actually, I did, over there. We're about, I think I'm about 35 million ounces at the moment.
Okay, so you only have to increase that by less than 10%. We've got a mine here.
Yeah, I don't want to get 40 though, but no, I think the important thing is most of those ounces have also been mined. I just got word today, the original discovery we made back in the 90s in Tanzania at Gator. They've just closed open pit mining after 20 years of that deposit. They're still underground on it, but it's always good to hear.
Great. Well, Hugh, thank you very much for taking the time. Next, guys, we are going to be talking to Mario Stefano from Omai Gold Mines. And Omai is an investment that I made and that Resource Insider made earlier this year. It is one of the deals in our portfolio that I'm most excited about. For one, it's located in Guyana. Guyana is one of the most prospective places on the planet for gold exploration. Obviously, the Guyana Shield is largely based there. Not to mention, major oil companies are now plowing billions of dollars into that country due to oil discoveries there. So there's a lot of money going in there. There's a lot of gold in that country, and it is one of the least explored regions of Latin America. So Omai, I think, is one of the most exciting deals there. It has a historic asset that's produced millions of ounces, and there are many indications that they have just scratched the surface. So I'll let Mario tell the rest of the story. Mario, please let us know all about Omai and why you got involved and what we can expect next.
Yep, thanks, Jamie. Thanks, everyone. As Hugh explained, what you're seeing on the African side, on the Guyana Shield, which is really exciting. This is really on the opposite side, on the Latin American side. And Omai, I think, is a very, very simple story. If you can invest in a company that produced 3.8 million ounces of gold, these deposits been on strike to depth with a number of targets all around the existing pits. And to add to it all, the grade was 1.6 grams per ton in open pit. Would you invest? I think most people would, and this is really what Omai is. The Omai mine was a prior operating asset owned by Cambior, and they shut it down in the mid-2000s when IAMGOLD took over Cambior. And the reason for that is it really was a low gold price environment. And IAMGOLD through Cambior had a major discovery in Suriname, which is now Rosabelle. And as many know, Rosabelle is 16 million ounces of what's been mined and what's existing in resources. And IAMGOLD made the decision to move the mill from Omai to Rosabelle. And I think at the time they probably made the right decision, because Rosabelle, looking forward now, was a major discovery. And the unfortunate IAMGOLD perspective is there was really no additional drilling at Omai to define additional resources, other than some resources, significant resources sitting under the mill. So one way or the other, IAMGOLD had to move their mill, and they made the decision to move it to Suriname and basically accelerate the Rosabelle mine. But that really is the opportunity for us now with what's left at Omai. If you go to the next slide, because I got 10 minutes, I'll try and hit all the key highlights. Next slide, please. That's the guy in the shield, and you know, you look on the African slide. On the African side, if you go back one more, if you look at the African side, there's been some major discoveries, but I think on the Latin American side, it's really underexplored relative to the amount of drill holes you've seen on the African side. And you've had some major discoveries obviously in Latin America, the two big ones being Marion, which our VP of Exploration, Dennis LaPointe, discovered, and Rosabelle being 16 million ounces. So some major discoveries, and I think Omai has potential. Again, it's 3.8 million to date, but I think it has potential to be the larger discoveries. If you go to the next slide. That is what Omai looked like when it was in production. Stay on this slide. A little bit heavy. I think this slide here with the drill hole is probably the most important slide in the whole presentation. If you take nothing away from all this, on the next slide with the graph, if you take nothing away, basically what you should take away here is that Omai was vastly underexplored. You basically had almost 800,000 meters of drilling at Rosabelle. You had almost 500,000 meters at the Marion mine, Aurora mine, which was taken over recently. This guy in Goldfields project by Xinjiang had almost over 400,000 ounces or meters of drilling. Omai is basically, even though it produced 3.8 million ounces of gold at 1.6 gram, only had less than 90,000 meters of drilling. I think that really highlights to everyone the lack of drilling in a major discovery that occurred here. And this is really the big opportunity. We see potential that a lot of gold was left behind by Cambior and Omai Gold. If you go to the next slide. This is important. Again, I'm just going to touch on the highlights. The two areas that you can see with all the green dots, that's all the drilling that occurred at Fennel and Wenot. And those two pits produced 3.8 million ounces, but they're wide open on strike, particularly at Wenot. And I think there's potential to find additional resources on strike, in addition to the depth potential at Wenot. At Fennel, to the right, it's Broccoli Hill. That's our high priority target. You can see, look very closely at Fennel holes that was drilled just east of Fennel, extend and strike to the east. It's a new target, sure. And we think if they continue to drill further east, they probably would have discovered Broccoli Hill. Next slide. This is the geophysics. We recently completed some geophysics at Omai, and I think the key highlight here is two things to point out. I'm not a geologist, and I take away the simple things and try to interpret what my geos are telling me. But what's interesting here is Wenot and Fennel, even though they are from the same intrusive source, actually have two different geophysical signatures. Wenot is a magnetic high, and Fennel is a magnetic low. And once we understood that, and which we now do, it really opened up additional targets here for looking for additional potential open pit and underground discoveries. What is interesting here on the geophysics is not only are we using geophysics here, we're using our structural geologists to help identify targets, as well as what we're seeing from surface exploration. So we really think there is a lot of targets in and around the Fennel and Wenot pits. And when this was shut down, Rosabelle and Marion weren't really discovered in terms of size, and a lot has been learned since then. And if you look at Marion, you look at Rosabelle, it's not one big super pit that produced 16 or that has 16 million ounces resources at Rosabelle, for example. It's a number of smaller pits, and we think again at Omai we have the same thing or potential for the same thing here. Next slide. I keep going to actually the one after the next, geophysics. Basically, I'll just talk to it. If you look at Fennel at depth, so when Cambior was mining Fennel, they hit a non-mineralized dike. So they basically stopped mining Fennel at around 200 meter depth. One more slide, please. And they hit this 100 meter thick, one more slide. They hit this, you can almost see it there with that blank area. They hit this 100 meter thick area, stop here, and they stopped in the pit at 200 meter depth. And what they decided to drill below the dike and they hit some high grade holes. And now that we got all the data, and really what you're seeing on this slide is all the blast hole data. And this is actually quite important because we're not starting from scratch here in terms of trying to look for additional ounces and trying to understand the nature of this deposit. We know it. And what you're seeing here is all the blast hole data that we were able to get from the database. And what you're seeing here is high quartz veins and at times a quartz. And I stopped mine at 200 meter depth because they hit this non-mineralized dike that's about 100 meters thick. But the mineralization didn't stop because this was a post-mineral dike. So that continued under the dike. If you go to the next slide. And really what you start to see now is below this dike some really high grade, thick intercepts. And this is amenable to underground mining. I have underground mining experience. You could basically go from the bottom of this pit, do a decline through the 100 meter thick dike, and then you're into high grade, wide zones of mineralization at Fennell. And you can see some of those drill holes, 143 meters at 2.6 grams. Obviously, you got some much higher grade intercepts in between. 101 meters at 35 grams. That's a multi-thousand gram hit there. 49 meters at 25 grams. Again, these are all world-class hits. If any mining company drills one of those, I think the market would pay attention. I'm just highlighting 3 of the holes, and I'm telling you there's more of those that you can see later in the slide. And then on this image here, you can see at the very bottom there, the mineralization didn't stop. They drilled 46 holes here. 41 holes had 31 grams per ton or greater, over a meter or greater. But a number of holes all ended in mineralization. So we're pretty confident as we get back to drilling at Fennell that we're going to be able to define here a sizable resource. And Iron Gold actually did define an internal resource. It's not 431 compliant, but the resource is between 1.5 to 2.5 million ounces, between 2.5 to 4 grams per ton, depending on capping grades. We actually think the grade is higher than that because when they did the internal resource, they based it on open pit type resource. So they use 3 meter composites, for example, which they probably should have used 2 meters. So we're pretty confident once we get at this and we do a resource, we're going to have higher grades than the 2.5 to 4 grams. Next slide. I just want to get to Wenot next. Actually, Broccoli Hill will be next. A couple more slides in. So when Iron Gold was operating this asset, as I mentioned, there wasn't a lot of resources left, and they made a decision to move the mill to Suriname. But we did identify a lot of exploration targets in addition to depth. Hold it here. This is Broccoli Hill. So as I mentioned, there was a fan of holes just east of Fennell. And basically what's happening here is they never continued to explore deep or to the east of that. And as a result, we think they missed a potential target here. The red dots, that's all the alluvial workings. And we think the prospectors are probably, the local prospectors are the best people to find deposits. And you can see all the work that's been happening here. And the area there is all the gold identified in auger. And you can see quite a bit of wide zones here. You basically got a 500 meter by 500 meter area here. And the geophysics is telling us something sitting underneath this hill. And to us, this is probably one of our top exploration targets just north of Wenot, east of Fennell. And, a couple of drill holes here will identify whether there is real potential here for a new discovery. And if there is, I think the market's really going to revalue this project. It's not just about Fennell and Wenot at depth and at strike. It's really about additional targets that are in and around this area. And then the market will start to view this, I think, as potentially another Roosevelt or Marion. If you go to the next slide, let's get to Wenot, because I'm trying to stick to a 10-minute time. So Wenot was mined similarly to about 180 meter depth. And you can see it here. The mill is just to the east. Obviously, it's been now moved and reclaimed, and it's now in Suriname. But there's about 300,000 ounces sitting below the mill from what we can identify from the internal reports at Iron Gold. And mine them on strike because they would have to move the mill. But a couple of things I really want to highlight here very quickly is the sediments are mineralized. I don't know yet if it's ore grade, but there is definitely gold in those sediments. And if you look at Roosevelt and you look at Marion, a lot of gold is in the sediments. So that's a new exploration target for us. And the reason why that's very important is not only is this open to depth and on strike, if we can identify ore grade in the sediments, then you can also expand this, the width of this ore body, which significantly decreases this ratio, in addition to having quite a gold. So I see lots and lots of potential now at Wenot. And this is where we're going to start our drill program. If you go to the next slide, this is where we're going to start a drill program. We're going to start drilling at depth at Wenot. Even though we see lots of potential on striking, you can see the ore grade hits there at Wenot on strike. But below Wenot pit, the next slide, please, there is quite a bit of potential for mineralization. And we know that because we were able to reclaim 5,000 meters of core. And when we got the blast hole data, you can see two large vertical structures, and you're basically lying down looking up into the sky. So this would have been historical what was mined here. And these structures didn't just stop because Iron Gold decided to stop mining at 190, 180 meter depth. They continued at depth, and we're really confident that not, similar to Fennel, we continue to drill, we're going to get high grade, wide zone mineralization below the 200 meter. Next slide. A couple more slides, actually, to the table that has all the drill holes right here. You can see here, I think tells the whole story. These are all the drill holes below Fennel at Wenot that have been drilled but have never been mined. And you can see, if any company drills any of these holes, the market pays attention. But I've got almost 20 holes here that are all not only high grade, they're wide zones of mineralization. So I really don't think this ore body stopped at 3.8 million ounces mined. I think there's a lot more gold here that was left behind at depth on strike. And if Rosabelle and Marion have taught us anything, there should be more of these type of deposits in and around this area. And we've already identified, just on our land package, almost 20 targets that are high priority, with Broccoli Hill being the most advanced because the local miners have done all the work for us and have identified a wide zone of potential mineralization. So from an investor perspective, because I'm going to try and keep this tight so that we can get some questions in for everyone. From an investor perspective, I think this is a very, very simplistic story. You got a high grade open pit style deposit. It's mined 3.8 million ounces. It never stopped. We think this mineralization goes to depth. This is the greenstone belt. These deposits in the greenstone belt go to 1,000, 2,000 meters. They don't really stop. And if we're successful in drilling out at depth, and we're successful at demonstrating more mineralization at Fennel at depth, and more importantly, we're successful at identifying new targets, I think this is story. And I think this is one that all investors should pay close attention to, because we are going to have some good catalysts coming out. We haven't started drilling as of yet. That'll start in early January, but we are assaying some core that was drilled below the Wenot pit, and I expect to start having some of that coming out by mid-December. And I think the market's really going to pay close attention to this once they start to understand that this mineralization never stopped at 180 meter depth because the mine stopped. That's the 10-minute pitch on Omai. And I'm always happy to have anyone ask me any questions or send me emails or call me on my mobile. I really like talking about the story because I think this is going to be the project to pay attention to when it comes to gold deposits.
All right, thank you very much, Mario, and everybody else that presented today. So now we are getting in, as I speak, numerous questions from the attendees. And if you're wondering how that works, go to the GoToWebinar control panel. There's a little questions section there, and you guys can type things in, and I'll be able to see them, and then we'll do our best to get through them today. But I actually think probably the best place to start is a question for everybody that I got sent to me by a guy named Chris. And the question is basically this: in 30 seconds or less, what are the catalysts that are coming down the pipeline for your company over the next year that investors can be excited about? If I'm sitting at home today, I've got some money, I want to put it into a gold deposit, why should it be yours? What's going to happen to make that really create value for me in the next 12 months? Let's start with Steve and Ken. Come on, guys. You're first in line on this one.
Okay. Yeah, no, we've got drill results. We're going to be drilling, and we're talking about a new discovery. And there's the potential right there. And then we're lining up our second project, Bakashka, which is pretty exciting, another big footprint that we're going to try to start drilling again next year. So those two things are going to change the future of what's going on at Pukara.
You know, you've been drilling for some time now there, Steve. When can investors start to expect to start to hear results from those programs?
This month, we started about October 15th. Labs are overwhelmed, like in Peru, like they are everywhere else. We're expecting results to be coming out here this month, December.
And how many holes are you in now?
We're on hole 17 right now, and we're exceeded about 2,500 meters of drilling. So this is a virgin program, our first one.
All right. Hugh, Montage, what can we expect over the next year?
Drill results probably starting to come out in January from this program. Hopefully a doubling of the resource by the end of January, a PEA by the end of March, which on a large scale solid development project, and then pushing forward for more drilling and a feasibility study by the end of 21. And hopefully the little bit of spice in there would be to be able to affect some of that consolidation, which really would be a game changer.
Okay. And Mario, what are your comments at Omai? I think I can guess this one.
Well, look,
what are we going to see?
Yeah, I think it's very simple, right? We got some assays coming out from below the wind that we know were wide zones and some good grades. We then start to drills in January, continue at Wenot, then we move to Fennel, and then at some point in the year, I hope to have a resource update for Fennel and potentially Wenot. And I think based on the amount of ounces we already see here internally and historically, I think again that this is a sizable deposit that we're not trying to drill here for 1 to 2 million ounces, because you could basically see that already. So this is going to be one of the larger deposits, I think, when it's all said and done in the Americas.
I just got another question for you sent through, Mario. One of our listeners is wondering, what is the ownership position of management in Omai? Do you guys own a significant part of the company? Where do you guys sit?
Yeah, in terms of management, we actually have strategic shareholders. Silver Corp owns just under 16%. Sandstorm owns 10%. In terms of the management, I don't own nearly enough, just to be pretty blunt. I came to this story just recently and came on as CEO. So I'll be owning about 2% of the company, and I hope to build.
Oh, I think we might have lost.
So I think we got a bit insiders. Oh, am I back?
You're back now. Yeah.
Ownership, but in terms of myself, yeah, we have significant insider ownership. But in terms of myself and the management team, we're probably running at 20, just under 30% combined.
Okay, Steve and Ken, there are some political issues going on right now in Peru. It hasn't been totally smooth sailing. Has this impacted exploration work getting done in the region you guys are operating, or throughout the country at all?
Not that we've heard of. The political situation has certainly been a concern. The 3 presidents in a week, from an impeachment to resignation to now it's settled back down. Protests are non-existent again after that first week. Did not affect our activities at all. On the local level, work continued.
Good. Another good question for you guys is some investors will know that you have a couple of joint venture agreements with Solaris Resources, a copper-focused company, primarily focused on Ecuador, but with some joint ventures with you guys in Peru. Is any work being done yet by Solaris on their JV assets with you guys?
Yeah, there's 2 option agreements. They're working on the communities right now, and they're permitting the drill. So that's where they're focused. And Omai Gold, which has been mentioned a couple times here, we have an option agreement with them, and they are drilling as we speak on the Los Tombos Santo Tomas project.
Okay. Now, Mario, we got a good question from someone here. The Omai stock has been under some pressure lately. You guys came out of the gate around 25 cents. Last I checked, you were trading around 17 cents. So there's been some selling going on there. What do you make of this? Is this a result of a general softening of the market? Do you guys have those sort of institutional or larger shareholders that are helping to backstop your stock? How are you managing this, and what can we expect out of that, in your opinion?
Yeah, to your point, I think we came out in a softening gold market, but from an investor perspective, I think this is probably one of the best opportunities to get into the story ahead of the catalyst coming through. We don't yet have any large institutional shareholders. We do, as I said, have Silver Corp and Sandstorm as large shareholders. And I think the reason for that is we don't yet have a resource. And I think as we start to get 43101 compliant resources at Wenot and Finel, I think you're going to see some large institutions really start coming into the story. So I think from an investor perspective, you know, if the share price is trading at 17 cents, I'd be buying, because if we are correct in this thing being a multi-million ounce discovery, I don't think you're going to have a better entry point at any point in time. And you know, Silver Corp, when they put their $4.5 million US investment, they did it at just under 20 cents, 19.5 cents Canadian here. So you're actually buying this at a discount to what Silver Corp put their money in it.
Thank you. Hugh, is Montage a production story? Are you guys going to do what you did with Redback and put this thing into production and either run it or sell it then? Or is this a story where you know, you really solidify that reserve and then find a natural buyer for it and somewhere with operations in West Africa?
Yeah, I think in my view, every junior explorer has to be prepared to build a mine. So everything we do on this project, as it hasn't been in the past, is based on the idea that we're going to build it. I think that's where Redback really made the money, was the willingness to be able to build a mine, in Ghana back in 2004-05. I think that's the way of generating value. If you get taken out along the way, then fine. But you know, I think you have to be prepared to do it. You have to be in a position to be able to do that, in my view.
Now, what about M&A opportunities in the region? Is there anything in particular that you guys can talk about that you're looking at? Is it more exploration ground, or are there potential developers that you could merge with or acquire, or something like that? I said developers, I meant to say operators.
Yeah, I think there are probably some opportunities out there. I think once we've established what we think Côte is, probably going into the second half of next year, that sort of starts to become a bit more real. I think for this, the moment, that consolidation concept is one of the key things we'd like to work on, because that's really where Côte sort of goes from a pretty good asset to an extremely good asset. The impact of those of satellite deposits on a large low cost asset is significant and adds a huge amount of value to it. So for the moment, that's the key.
Okay. We got a great question here for you, Ken. Ken, why did you join this project? I heard you were retired on a ranch somewhere and you're not a kid anymore. What's the reason for getting involved in this story? Oh, you're muted, Ken. You're muted.
I was just saying, I can almost guess who might have asked that. I had worked at Mulatto's for, gosh, I think close to 16 years between Placer Dome and Alamos Gold. I really like high sulfidation deposits. They're very rewarding. And Steve had been trying to get me down to Peru for years to look at his assets down there. And I finally couldn't say no anymore. I went down there and I was amazed at what I saw. You wouldn't see undrilled prospects like that remaining in Mexico or the US anymore. So I was kind of hooked from first sight. And the more work we did on the project, the better it looked and the more things seemed to fall into place. So I thought it was a chance to repeat the Alamos experience, from basically starting at an early stage exploration project to going through at Mulatto's. I think we had, well, it's in 15 years of production and has produced over 2 million ounces of gold, including 2 high-grade underground mines, which are another nice caveat with high sulfidation deposits. So that's what hooked me.
Okay, well, thank you. Mario, this is a good question for Omai. In terms of capital, in terms of the money you guys have in the bank, are you fully funded for the next 12 months? Will you be needing to come back and do another raise before that time?
Yeah, we have $4 million in the bank, and that's more than enough capital to do a 5,000 meter drill program. You know, we're a junior explorer, and unfortunately, we're not revenue producing. So, will we need to come back in the next 12 months? Likely. You know, when the market is right and the opportunity is right for us to create value for shareholders, we'll definitely have to come back to the market. But we're not coming back to the market in the next 3 or 4 months. I think we've got some time here to really generate value with the drill bit. That should see existing shareholders benefit greatly going forward.
All right, guys. Well, that's all the questions we have right now from attendees. You know, before we say goodbye, you know, thank you very much for your time. Thanks to Mercury Media for hosting it, and of course, everyone that tuned in. Does anyone have any closing statements, anything they haven't been asked, anything they'd like people to know before we sign off?
I think I'm good.
Good. Those crickets right there. Okay. Well,
We're good.
everyone, thank you very much
Thanks,
for paying
Jamie.
attention to this. If you have further questions, please go to resource-insider.com. You can sign up there and you can send me an email, or you can follow me on Twitter at Jamie Keech. And of course, we're happy to answer any future questions. Gentlemen, thanks for taking the time, and thanks a lot to everyone at home who tuned in today. All right, take care,
Cheers,
everyone.
everyone. Thank you.
Thanks,
Ciao.
Bye
Jamie.
for now.
Really
Thanks,
appreciate
Jamie.
it. Thank you.
Thanks, Jamie.